Hey everyone, welcome back to Corporate Decoder, the place where we decode the secrets hidden in those hefty corporate filings. And boy do we have a juicy one today. Public Storage is dropping some numbers, and we're here to figure out if they're storing up success or if things are a little less than tidy before we dive in if you want more straight talking breakdowns of financial document. So make sure you hit that subscribe button and join our ever-growing community. We also have a Discord server linked in the description below where we chat about all things corporate finance. Alright, let us get right into this. Public Storage is filing their Form 8, which is essentially a report on significant events they want to tell us about. The earliest event reported here is the 8th of December 2025. Now, Public Storage, as you probably know, is a big player in self-storage. They are a real estate investment trust, which means they own, operate, and develop self-storage facilities. The form tells us that their common shares are traded on the New York Stock Exchange under the ticker symbol PSA. They also have a bunch of different classes of preferred stock and even some guaranteed notes all listed on the NICE too. The main point of this filing is to share an investor presentation that Public Storage is using. This presentation includes an operating update for the 11 months that ended on the 30th of November 2025. Let us dig into these numbers because this is where the story gets interesting. They are looking at their same store facilities, which are facilities they have owned and operated consistently for a while. This gives us a clear picture of how their existing business is doing. For the 2 months ending the 30th of November, they saw average annual contract rent per square foot drop by 10.0%. That might sound small, but it means they are getting about $1 less for every square foot they rent out compared to last year. Over the 11 months, however, the drop in average annual contract rent per square foot is about 6.2%. This means that while they are still signing new tenants at lower rates compared to last year, the overall impact on their existing contracts is less severe. This is the kind of detail that shows us trends. During the 2-month period, they had more tenants moving in. That is a 2.9% increase in the number of square feet being rented by new people. That is a positive sign. They also gave out fewer promotional discounts, a decrease of 9.8% over the 2 months. This could mean they are becoming more confident in their pricing power. On the flip side, they had tenants moving out during this 2-month period, and the contract rents lost from these move-outs was $69,000, $96,000. This is a significant number. It means existing tenants are leaving and taking their higher rent payments with them. The average annual contract rent per square foot for tenants moving out was $20.24. It is interesting to note that this is pretty much the same as last year, which suggests that while tenants are leaving, maybe the rent they were paying was already at market rate. They are losing volume, not necessarily higher priced customers from what these numbers suggest. Looking at the 11-month period, they had a slight decrease of 0.8% in the square footage of tenants moving out. This is still a bit of a negative, but less pronounced than the 2-month period. The contract rents lost from move outs over the 11-month period amounted to a very large $2,125,716,000. This signifies a considerable impact on their revenue from departing tenants. At the 30th of November, their square foot occupancy remained steady at 91.2%. This means they are keeping their facilities pretty full, which is good for consistent revenue. However, the annual contract rent per occupied square foot was down slightly by 0.3% to $22.59. This suggests they are not able to push rents up for their long-term tenants as much as they might like. Beyond these operating numbers, the presentation also talks about their growth. Since the beginning of the year, they have acquired or are under contract to acquire 88 self-storage facilities covering 6.1 million net rentable square feet for a hefty $949.4 million. This shows they are still very much in growth mode, expanding their empire. Now let us talk about this in plain English. Public Storage is facing a bit of a tug of war. On one hand, they are attracting new tenants and keeping their facilities almost completely full. That is strength. They are also managing to reduce the discounts they offer, which is a good sign for profitability. On the other hand, they are seeing rent income drop from new move-ins and existing tenants moving out. This indicates that the market is either getting more competitive or demand has cooled a bit, meaning they can't command the same high rents as before. Losing 6.1% on average rent per square foot for new leases over 11 months is not ideal, and losing over $2 billion in contract rent from move outs over the same period is a significant headwind. The big investment in new facilities shows confidence from management. They are betting that overall growth in the self-storage market or their ability to turn these new assets around will outweigh the current rental softness. The question is, can they continue to fill these new spaces and eventually push rents up across the board, or are they in a market where they will have to accept lower rental rates for the foreseeable future? They are essentially trading higher immediate rental income for long-term expansion. It is a gamble, but one that aligns with a growth strategy. The key things to watch are whether those move-out rents stabilize and if the average rent per occupied square foot starts to climb again. For now, they are full but earning less on each unit from new leases. Alright, that is our breakdown of this public storage filing. What is your take on these numbers and what do they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching, see you next time.